Welcome back to Your Average Investor. Today we're going to be talking about insider trading, specifically how to set up an insider trading scan query on your Thinkorswim account so that you can look for potential insider trades and decide to follow along with them or not. It's kind of like Unusual Whales. If any of you are familiar with them, they've got a great product, but it does cost something like 50 bucks a month. So if you don't want to pay 50 bucks a month, there's another way to do this, and it's totally free within Thinkorswim. I'm going to show you how to set it up, and then I'll also be sharing this scan query as a link in the description so that if you want to just copy and paste this and upload it into your Thinkorswim, you can do that as well. Now, the first thing you're going to do is subscribe to the channel if you haven't already, because it helps support us. And once we get monetized, we've got a lot of really fun plans for this channel. We also have a $100 giveaway going on right now. I say right now, but it depends on when you're watching this video, because you could be watching this a year from now. So next thing, you're going to open a new watch list. You do that by clicking the little button down here and then clicking watch list. And this will pull up a watch list that says default. I'm going to go ahead and delete this gadget because I already have it. You'll open that up and then click on create scan query. I'm going to edit mine to show you what it looks like. When you click create scan query, something just like this will pop up, except for these will all say stock. So what you're going to do is hit the X on these to remove all of the ones that say stock. And then you're going to name the query insider trading scan or big options volume, something like that, whatever you want to look at. And what I'm looking for is I'm looking for all stocks that have option volume of at least 500 on a single option chain, and the open interest is less than 500 on that option chain. So what this is going to tell me is I want to find an option chain that's not popular already. So for example, like Apple or Tesla, a lot of their option chains just get a ton of volume on them because people like trading those. But if I cap the open interest at 500, it's going to filter out a lot of that noise. Next, I'm going to look at days to expiration. I've got mine set to 14. So this will show me anything that's going to expire in the next 2 weeks, which in my experience is about the time frame when insiders, if they're buying because they know some news about earnings or something else, that's generally the time frame for it is about 2 weeks in advance or less. A lot of times I can even shorten this down to 1 week, and I found some excellent trades shortening it down to the 1 week time frame. And then the last thing I'm going to do is I want to filter out what I call penny options. They're the options that are going for less than $5 per contract. Sometimes you might find some stuff there, but generally you'll get a lot of noise there of just people that are doing a big YOLO bet or something like that. So I'll filter it by saying it has to be going for at least $5 with no max on it. And then I want to look right here, so I'm going to switch this default. This will say stocks. You're going to switch that to options, and then default this will be set at something low. Put it all the way up to 2,000, and then hit save and hit save and continue. And now when you go back to your watch list, you'll go to your personal, find insider trading scan, and it's going to pull up something that looks like this. You notice I've got mine keyed to yellow. What that means is when I click on any of these here, it's going to automatically put it over here on the yellow frame. So I've got these keyed to red, this one keyed to yellow. So for example, I click on this AA, it's call 45.5, and this is where you need to do a little more analysis and reflection to determine what's going on here. Is this just noise? Is it a big whale just making a bet on a play? Or is this a potential insider trade? In this case, what's interesting is I've got this graph set to the 1 minute chart for the last 20 days. And you can see, other than literally today at a little bit after market open, there was no volume or virtually no volume on this contract. The open interest was 8. And the volume today is over 3,000 contracts. These contracts are relatively cheap, right? They were going for $6 to $7. Now they're $12 to $15. Let's move the chart real quick to AA. So you can see here, these contracts were either bought or sold right at this point here. You can see where the price just dips down. That's right at the same time frame here. And then since then, the price has moved up pretty significantly. Now, generally, when you see a red candle like this, not always, but generally, it means that somebody was selling these contracts, right? Because they're going to be hitting the bid when they sell, which will drive the price down. And if you hit the ask, it's going to drive the price up, and you'll see a nice green candle. And so this, to me, looks like somebody was selling a massive batch of what they felt like were pretty far out of the money calls. So either they're selling these naked and taking a big bet, or maybe they've got a big position in AA and they're selling covered calls. And I can continue to go through here and look at different ones. You can look at, so I can sort it two ways. I can go, one, show me what has the most volume. Look at this. HIMS, open interest 2, volume 21,000. That's just seems absurd, right? So let's go ahead and look at HIMS and go, what the heck happened? Look at this. They jumped from $14.50. Today they opened about 16, climbed all the way to 20 bucks, and now they're sitting at $18. This to me doesn't look like insider trading. This looks like a bunch of people just piling in a trade. And it's, it's a self-fulfilling prophecy. The more people pile in, the more people pile in. But let's say that I caught this volume early in the morning anyway, right? There's a ton of volume here at about $60 per contract. I could have rode that all the way up somewhere and sold between 150, 250 per contract. However, it's important to remember these scans, they don't update continuously. They update about once every 3 to 10 minutes, depending on what Thinkorswim is doing at the time. So it's not like this is going to guarantee to get you an unusual play as soon as it hits the market. It might, but usually every 5 minutes or so, you can check back and see if there's anything new. Now, one more thing, if you haven't set these options already, I like showing it like this: symbol, volume, open interest, last. Hit this little gear right here and hit customize, and that's how you add and remove items out of here. You just search over here for volume, which I've already got, so it's not going to show up, and add it, and then remove anything you don't want. And then you'll get a nice clean little table like this. Let's move on to the next one though. So here's another interesting one. We've got LI, we've got call 22s and call 23s. This to me looks like somebody entered a spread. So we're going to look at the 22s. Here's the 22s right here. That's where a lot of the volume is. And of course there's volume through the whole day, but a big chunk of it's right there. And then we've got call 23s here as well. And we're going to zoom in on this. And let's just look at LI. So there's two ways that this could have gone down. And it looks like LI just had earnings today. So somebody could have said, you know what? I'm going to enter a bullish position. And to enter a bullish position, what they would have done is they would have purchased these call 22s. And they would have sold these call 23s. And what that would have looked like, let's just go here. Let's see, these expire 5/24. So they would have bought the 22s and sold the 23s, and that would have looked something like this, where it cost them $31, and they have a potential to make a max profit of $69 if the price goes up over the next 4 days. So they're thinking maybe, oh, this is an oversell. It's going to come back up above 23 before expiration. Now, it could also be a bearish trade. A bearish trade would be where they sold the call 22, and then they purchased the call 23 like this, and they're receiving a $30 credit for that trade. And in this case, what they're hoping is that the price remains below $22 per share over the next 4 days. And so long as it does, then they'll get to keep that $30 credit and not have to worry about it. But if the price climbs up, they could have as much as a $70 loss per contract. One thing you can do here to attempt to find out how the trade was placed is you can go to option time and sales. And this is going to show you any of the biggest positions that were entered during the day. I've noticed the data here isn't always accurate, but it gets okay. So what I want to do here is I want to look for the same thing, and that's interesting. That just swapped to show me stocks instead of options. We'll get back to that in a second. But we want to look for those call 22s and those call 23s and see if they were entered right here. Like you can see condition as a spread, right? So someone came in and they entered a spread right here with these call 45s and these call 60s. Kind of interesting. So that, and those expire January 17th and 16th. That's odd. They both bought 2 different years, so it's both it's a calendar spread and it's a call spread. That took me a second to realize. So they've got a calendar spread and a call spread here that they entered, which means possibly they bought the call 60s and then they sold the call 45s, and it would look something like this. So if I'm here and I've purchased these call 60s, and then I'm here and I've sold, let's find those 45s. I've sold these call 45s. It's just going to reduce the amount of money that I have to spend on those call 60s. So it's an overall bullish position, and that reduces the amount that I have to spend. It just says, hey, you know what? I don't think it's going to hit $45 by this time in January of next year, but I do think it's going to go up before January of 2026 I just don't want to put that into a position where I'm only buying this premium here. Now, the interesting thing about this is this would take an absurdly large amount of capital to enter, because your maximum risk is the difference between the 45 and the 65. So if before expiration HIMS did move up to say like $60 per share, you do have some protection here because you've got to call 60, but you have to make up that whole difference between 45 and 60. So the other way they could have done it, of course, is they could have bought the call 45 and then sold the call 60 against it. And this would have resulted in a $90 credit, as you can see here. And again, it's not my favorite trade. It's a little bit odd, but that's the other way that it could have happened. So you can see here, you have to do a little bit of investigative research. I can see the trades, and let me just pop this. What we're gonna do, if this happens, just pop it to a different watch list, and then pop the watch list right back, and then it should refresh with the options again. So there's the options again. And so there we had the LI call 22, LI call 23. Let's just look at a couple others while we're here. So here's let's see, CART. I have no idea what CART is. This is interesting. Someone came in today on CART, and they traded 6,000 put 31.5. So I'm going to go here to CART. I'm going to go, wow, so they just recently IPO'd. Is this Instacart? Is that what this is? I think this is Instacart then. Let's see. CART stock. Yeah, that's Instacart. Okay, cool. So if I were to follow along in this trade, this is what I'd do. So here's CART stock. It's Instacart. I'd come here, and I'd do a little more digging. So we're going to look at CART. And it looks like they had their IPO. They came down, they came up, and maybe they're coming back down again. I see a couple of things right here. So we've got sales 3 billion, market cap 8.6 billion, not that bad, but look at that negative income, massive negative income there. Cash per share sitting at 6.26. So if they're losing that much money, my guess is, and they only have this much cash left per share, my guess is what somebody's thinking is they're gonna have to do an offering soon. They're gonna sell some stocks on the public market in order to raise some cash to continue operations, and that's gonna cause dilution, and people are going to be selling. It's going to drive the price down. Let's look down here even further and check this out. All of the recent insider trading is selling. There was a bunch of buying happening here. This is interesting, right? So let's see, SCUS Ltd, they're a 10% owner. We've got a director here that was buying some at around $27 to $29, and then it moved up, and above $30, everybody's selling. You've got the chief accounting officer, general counsel, CFO, CEO. Look at that. The CEO is just selling stock like mad. And his most recent sale was May 1st, the beginning of this month. And another one from the chief accounting officer and they're not incredible. I mean, this was a big sale here. Look at that. March 20th, he sold 82,000 shares. That was pretty big. To me, though, that looks like somebody saying, hey, I think Instacart's going to move down, and they're going to move down pretty fast. They did recently have earnings, so it's not an earnings report they're moving down on, right? It's something else, which means possibly it's some sort of insider news about we're going to do an offering on the market to raise some cash, and then, price drains. So 31.5, that's not too far out of the money, but look at the expiration, 5/31. So let's close these up, go to 5/31. And it was, what did we say? The put 31.5. So right now that's going for $35 to $45. That's the one we look at. You can see here, there's the volume, 6,000, no open interest. And what's fascinating is to see, it looks like somehow this guy got filled. Maybe it was earlier today. Where's our time? 8:51. So he got filled up here before this big dip. And so this guy is already up 100% on the trade. Was there some news that came out already? No, no real news here. But that, to me, that's fascinating, right? 6,000 shares 31.5. They expire in 11 days. That would be one I'd consider following along with. And it's got that, to me, has all of the signs of an insider vibe. Decently far out of the money, or at least it was when he bought his position. It's a little closer now. Massive amount of volume. It's not necessarily the biggest trade in the world either, right? It's like $15 times 6,000. That's $90,000. It's a big trade, but it's not the biggest trade in the world. $90,000 here. And if anything happens where the market spooks, I mean, this guy, even at $30 a share, he's making money. So I like that as a potential insider trade. That's what I'm kind of looking for when I use this scan, is I just try to say, what's going on? Can I create a story for it? And of course, it's all just guesses. I'm just making educated guesses about the market, or about if these trades are insider trades or not. And because of that, I recognize the only thing that I can do to protect myself really is make sure I have an appropriate position size. Now, I don't think we'll trade anything like this in the challenge account, but let's just say I was going to, right? I've got $1,000 in the challenge account. What I would probably do, knowing these are at $40 per contract right now, if I wanted to, is I'd buy a single one for $40, because that represents about 4% of my account, which is actually quite a large number. I'm typically going to look for like 2%, or maybe even only 1% on an options trade that is this risky. Like if this doesn't work out, this goes to zero really quick and I don't make any of my money back, right? But that's the most that I would spend on this particular trade. The other thing that I might do is, because there was this pretty big dip right here that doesn't really seem like it was for any reason at all, is I might say, you know what, I'm going to just keep watching this option chain, and if Instacart climbs back up, then I'll take an entry. And if not, I'll move on and I'll find something else. But you can see how you can use this. Scan for unusual options activity. Again, if this was useful to you guys, please drop a subscribe, drop a comment below. We'd love to have your support and have your feedback as we continue to grow the channel. And we'll catch you all next time.